We have the management who's standing by itself. Well, we have Mr. Parmod Sagar, the MD and CEO of the company, who joins us. Hi, sir. We didn't want you to wait even for the break. So let's get straight to the action then. One good factor in these numbers is that the margins have improved on a sequential basis. So good on you. Could you tell us, how do you see things panning out for the coming year? In the past year, you had the benefit of a couple of inorganic acquisitions coming into your fold. What is the volume growth you're looking at for this year? And also, you have a peer here in India, which is Vesuvius, which is growing at a rampant pace. What is the market share you have, and do you see that increasing?
Okay, so actually India is growing at about 6% CAGR, and we are expected to grow more than 8%. This means we want to grow with the industry, but also the areas where we are currently underrepresented. Our current market share is about 30%, and we aim to achieve more than 35% by penetrating underrepresented segments like iron making, DRI, pellets, etc., with the technological support from our parent company.
Okay, got it. All right. The problem pocket, sir, for you is that asset you acquired from Dalmia. If I just do a rough back of an envelope calculation, it still appears that you're functioning at 50-55% approximately. And margins, I think they are in low teens, maybe 10 to 11% odd. Could you tell us what is the revenue outlook just for this acquired asset? Because the margins are relatively lower. So revenue outlook from this asset and margin outlook just for this one. Yeah.
Okay. As you are aware, there is a significant overcapacity in global refractory market, not just in India. This is due to the broader global macroeconomic factors, like in steel and cement production. Globally, whilst there is a huge pressure on geopolitical factors, there is a bit of stalling in policies of production due to election in Europe, US, even South America. Until there is a steel and cement production and consumption, this global overcapacity in our industry is going to persist. This will lead to significant price escalation due to overcapacity. As we are not guiding on revenue, but on volume side, we are comfortable with a growth of for Dalmia plants around 14-15% and overall around 8%. Our focus is to control controllables, which is our cost, operational excellence, ensure that the margin are similar. At present, our margin is 11.4% of last fiscal in Dalmia plants, whereas when we acquired it was 6.9%. So it is significant improvement in margins, and we are expecting that it should be further improved to that level of 12 to 13% in Dalmia plants.
Okay, got it. So Dalmia, just to get it right, the volume growth you're guiding out there is 15%, right? While for the entire company it's around 8%.
Absolutely.
All right. And for the blended margin, then what would that mean? Because you're going to grow, so operating leverage will play out to some extent. Dalmia will improve as well from around that 11% to around 12 to 13%. So on a blended basis, what should the consolidated margins look like?
I still maintain 14 to 15% on consolidated level.
Okay, all right. What about exports? As you're telling us, the globe itself is going through a bit of a tizzy, geopolitical tensions, demand is not strong enough. Exports, you have plans to scale it up drastically. For this year, what will exports contribute as a percentage of your mix, given the headwinds that we're already seeing?
Our export prior to this last fiscal was about 14% on consolidated level, and now it has come down to 10% in this year. And in the short term, I don't see any, growth in export business because of the reasons I mentioned earlier. So I say maybe after midterm 2 to 3 years time, the growth will come back, and we are expecting around 20% to 25% growth in export in midterm 2 to 3 years from now, not in this fiscal.
Okay, all right. So this year will be a bit of a dampener, but going ahead, you're expecting exports to pick up. Final question before we let you go. Besides the operational performance being a little bit subdued, the other worry for the market is that the Dalmia group has more than 10, 12, I think 13% of RHI Magnesita. And they're wondering whether or not that block is going to hit. Have you heard from them?
No, whenever I happened to talk to them, they never said they wanted to, offload this.
So you believe that they
are happy with that.
So you believe that they'll hold on to this 13%? Is what you're telling?
This is my perception, but Mr. Dalmia is the right person to answer this question.
Yeah, but we need to ask you as well, since you're saying off and on you speak to them. So I need to put this question to you. And if they are sellers, will the parent look at buying?
I think we are open for any and everything. If it's opportunity comes, we will definitely look into it.
All right, Mr. Sagar, thanks a lot for joining in. We wish you well. For the time being, in a market that's quite wobbly, the stock actually has been an underperformer the last year. But today, at least, the stock is outperforming because your margins have improved both on the standalone basis and on a consolidated basis as well. The stock is up close to 3% as we speak.